What is going on, ladies and gentlemen? We're back in another video, and in this video I'm going to be going over the difference of like when I go in without a bias and how I trade without a bias versus when I'm really looking for a bias. And a lot of people don't understand that you can actually go in the market without looking at a bias, or you can go in the market without having a bias per se. So I'm going to be kind of explaining that. If you don't know me, my name's Dodgy. I live stream every single day in Discord. I'm actually on vacation this week, but I got other people live streaming for me. So if you want to join that, click the link in the description. And the other thing is use code Dodgy, 71% off discount for Apex. I say that every single video. You guys know the deal by now. But again, if you haven't switched the futures off of Forex yet, I would suggest doing so before Forex prop firms crash. So I would recommend doing that. I made a complete guide on my inversion fair value gap checklist. This is what I used to get an 80% win rate, which easily got me funded. If you're interested, just click the link in the description below. All right, so in this video, again, exactly what I said. So when do I actually go in without a bias, and how do I trade? So there's days where like I'll go in without a bias. So I think this week has been fairly easy because we left equal high. So every single day I was kind of going in bullish, but there were kind of days where we were bearish and then we finally rocketed up here. So I'm not gonna use that as an example. Let me actually, I'm gonna go to right here, I think. So we're gonna go to here, and I'm going to just be fairly honest with you. I was bullish here and I was just completely wrong. But like, and again, we have equal highs up here, right? You can see perfect equal highs, and I was bullish here. So what happens if you're wrong? How can you still make money? Well, again, you still see plays work out here, right? This is still working out, but it just doesn't hit the full TP. It will hit like the half TP. So like if you got it in on this, obviously if you got it in this 5-minute inverse, right, your target's the equal highs, your bias is bullish, but it only hits half TP. So what are you supposed to do? Nothing. You just have to scale half and it's a break-even trade. Now, there's like this week, there really wasn't any time where I was bearish, but you will see a lot of these moves play out. Like this is a week where I wouldn't take this because we've equal highs above. But let's say there's no equal highs here. Let's say it did not have a bias. Well, then maybe I would short this. Maybe I wouldn't. It really depends. So I'm not going to use this week as an example. I want to go back a little bit. What's a day where you're not going to actually have a bias? A day you're not going to have a bias is if we're not in anything obvious. Okay. So what do I mean by that? Like right here. See how right here, like we're kind of just ranging. We're not really in anything obvious. We kind of swept sell side here. We swept sell side. We hit a bearish fair value gap. So we're in between two things that could possibly change the whole perspective of the market. Because one, we swept sell side, and two, we haven't inversed this. So if we haven't inversed anything back to the upside, telling us we're bullish, and we haven't retaken sell side, how do we know what we actually are? We don't. So this is an example where, okay, we swept sell side, we have a bearish fair value gap above us, and as you guys know from the ICT 2022 mentorship, why would you short this? Like, why would you short this if we already swept sell side? So this is an example where I'll go in the market with no bias. Okay, and what I do is, again, when we're trading in this range, I'm literally just looking for like these equal highs, equal lows, like momentum plays. So, for example, you can kind of see price. If I go on the 30-second actually, which probably doesn't show me, unfortunately. Let me just go back here real quick. I'm sorry about that, guys. So again, if we go back to the 15-minute, okay, we go back to here. Price was in between a lot of liquidity, right? It was in between this, which was holding this down, and it was in between the sell side. So what do? Well, I will just play the range. Now, what kind of makes that range? The bearish fair value gap and sell side, right? We don't know what the bias is if none of these break. So every time we go low into a discount, okay, I just draw a discount here. So I kind of just draw like from an impulse. So I would say this is the best impulse to use. And I just kind of, all I do is I look for longs and discount, look for shorts and premium until either of these break. So an example here is we kind of get this 1 minute, okay? And this is a 2022 model. And I know that, okay, we swept sell side. We haven't broken this. So maybe I could take this 2022 model only up to the highs. But then every single time I get here, I'm just selling everything. Because I'm gambling that we're going to break this every time. Same thing at the top. let's say I see an inversion, which there's no clean inversion here. Okay, there's no clean inversion here. But let's say I do see an inversion there, then maybe I look to sell. There might have been a 30-second inversion there, but I can't see that chart right now. So all I'm doing really is I'm playing these inversions from discount to premium, premium to discount until one of these break, until this low breaks or until this inverse breaks. And you don't understand why. If you watch ICT 2022 mentorship, if you know we swept sell side and you know that we should break this, but we aren't, is that truly confirming the bias is bullish? No. So what do? You just scalp the range until one of them breaks, and that's literally all I do. So the problem with this long here is we haven't broken this to confirm it's bullish. So why would you take this? If it was in discount, sure, but we never broke it. Like we broke this on premium, so you wouldn't take it. Any inversion here in discount to the long side goes, but any inversion to the short side doesn't go. And this was a play I did actually take. I think it was a 30-second model right here. And I kind of saw these injured highs, and I did end up taking this play right here. And I think I never sold all here, but I sold most here because I'm like, okay, we still haven't broke this. So this is just a prime example of what I do. It's just like I play discount to premium, premium discount. I don't try to hold runners here. I don't try to hold runners to the short side. So I don't hold runners to the long side. I don't hold runners to the short side. And that's literally all I do. So a couple other scenarios that maybe this could happen would be something like here. So this would be another example. See how we swept sell side, but we also have an inverse for rally gap. So literally from here, let's see here, from here to here, this kind of range, I'm in just scalp mode. I'm playing discount to premium, premium discount until the low breaks again. This low breaks again. Okay, but I know it's risky to short because we swept sell side again. So I'm just waiting for this. Okay, and this actually does break. So I did long more here because, again, here we actually did have a break. But this isn't really that 50-50. This is 50-50 because we swept sell side and we're back in a bearish rally gap. Okay, so I just kind of play the range here. Now, the only time this doesn't apply is if we leave really, really, really obvious equal lows. And this definitely does not apply here because we were actually in a bullish rally gap this whole time. Okay, so anyone saying, oh, we were bullish here or we were bearish here, we were in a bullish PD array, so I wouldn't have longed or I wouldn't have shorted. I would have just been playing the range in the lower time frame here because I'm expecting this inverse, and if this doesn't inverse, how do I know the bias, right? You don't. It's 50-50 until we kind of break out of this rally gap or we break above this rally gap. And we can kind of see we never broke this and we never broke this and until finally we got this 930 just dump here. Okay, so this would be another spot where I just play the discount, the premium, premium discount. I wouldn't hold runners, and that's kind of what I do. So hopefully this video gives you a better gauge on how I enter my scalp mode and how I enter with no bias. The only times you'll see me enter with no bias is in the situations I just showed above. Every single time we're like delivering from something meaningful or we swept sell side, we're delivering from something meaningful down here, I will always have a bias. But in those situations, as I just showed you guys, I don't really have a bias. Like I might not have a bias here because it's too choppy, and until something breaks, I don't have a bias, you know. But this is good signature and price. This is bad signature and price. It's very easy to spot the difference, and it's just so much easier to form a bias when we actually form fair rally gaps in the hourly and 15. And that's really what I wait for. So anytime we don't have hourly and 15-minute fair rally gaps and we're kind of in between two key areas, I play discount to premium and premium to discount. And just a little refresher, again, if you don't know what premium discount is, it's just a range where it's just a range where you have an impulse leg. So every single time we dip below the 0.5, you want a long. Every single time we go above, you want a short. And you literally don't hold runners. You just kind of scalp the internal liquidity. So you might scalp to this high, and then you might scalp to this low. And that's kind of what I do. So hopefully this video helps. I know this video may be a little confusing for some of you guys, but remember, play the discount to premium, premium to discount. Don't hold runners, especially if we're in price action where we're not forming obvious fair value gaps. Okay, here's an example of us not forming something. Here's an example of us forming an obvious fair value gap where when we wake up the next morning, this reaction alone just tells us the bias. Okay, so hopefully this video helps. Let me know if you guys have any questions, and yeah, peace.